Every time I receive a dividend or sell a stock, the cash sits in my account earning less than 1%, and that bothers me. Interest rates are up, but for most brokerage accounts, you wouldn't know it. Look at these rates. We'll come back to this one. I did some checking, and it's easy to get much higher rates and still have access to your cash. If you're not earning at least 4% on your idle cash, I have some good news for you. This video is not about investing in fixed income. A 5% yield with no growth is not my kind of investment. Today is about earning decent interest on the cash in your brokerage account and also having access to that cash. We'll look at solutions from 3 brokerages. Let's start with a simple solution. Etrade pays this much on cash sitting in your brokerage. Let's call it nothing. The good news is that Morgan Stanley bought Etrade in 2020 and they offer 4% via their premium savings account. So if you open that account, you can keep the cash there, and when you want to buy stocks, it's easy to transfer the cash to Etrade immediately. This one is a bank account, so it's FDIC insured. The negatives are a limit of 6 transactions per month, and it requires opening a new account. However, they auto-populate your existing information from your Etrade account if you have one of those, so that's pretty quick and easy. A quick disclaimer, I'm not a financial advisor. Since retiring in 2017, I began researching my investments in far greater depth because dividends now pay for everything. When I find something interesting, I make a video. Solution number 2, Interactive Brokers, is suitable for investors with larger cash balances. They provide this handy-dandy list of just how crappy their competitors' rates are. If you already have an account with Interactive Brokers, there's nothing to do. Just be aware of how it works to ensure you're getting the best rate. They pay nothing on the first 10K of cash, and their best rate is for accounts with assets totaling more than 100K. If that sounds like you, then put your numbers into their calculator to see what they'll pay you. I'll enter assets of 100K to see the maximum rate. If the cash amount is 20K, the first 10K earns nothing, so the blended rate is just over 2%. Not really that great. I'll enter the same 100K of assets and increase the cash amount to 90K. That boosts the yield to north of 4%. So you can see how this option is for people with larger cash balances. This option is not FDIC insured, but it is covered by SIPC insurance because it's a brokerage as opposed to a bank. One last note, in the short term, the yield is likely to increase, good news, to almost 5% because of the recent Fed hike. Interactive Brokers is available inside the US, but it's particularly useful for investors who are not US citizens or residents. If you're from outside the US and you want to invest in most major markets and currencies, including the US, they make it really easy. Interactive Brokers is a publicly traded company, and if you open an account with the link in the description, you can get some free shares in that company. The last of the 3 solutions I'll cover is from Schwab. They offer so many products that it's easy to miss their money market funds, and there are a lot of those to choose from. I'll focus on the one that offers the lowest risk and is the easiest to understand. Ticker symbol SNSXX. Sounds like an energy drink, but it's not made of caffeine and sugar. It's made of short-term treasuries. The unit price is fixed at exactly $1. The only thing that changes is the distribution. And if we look at the distribution history, it goes up and down with interest rates. A year ago, it paid nothing, so it was useless. But right now is obviously a good time to use this fund. According to Schwab's website, the last distribution was almost half a penny. Here's the exact number. If we multiply that by 12, we get a little over 5 cents, and the fund price is fixed at $1, so annualizing the most recent distribution gives us a 5.1% yield. Next month, it'll probably be something different, but in round numbers, it'll stay around 4 or 5% until the Fed lowers interest rates. Nobody knows when that'll happen, and until then, it's an option. Money market funds are built to preserve 100% of the capital, so they buy fixed income assets like these. SNSXX is so simple because it uses just one of these investments, the safest one, sugar-free US Treasuries. That makes this fund really easy to understand. If we look at the holdings, it's just a list of treasuries with an average yield of about 5% and an average maturity of less than 2 months. That's it. No corporate debt, no complicated financial instruments. If you want a slightly higher yield, Schwab has other money market funds that include those other instruments. For example, SWVXX includes commercial paper from foreign banks, and the yield is just a whisker higher. Money market funds aren't covered by FDIC insurance because they're an investment in a mutual fund, not a bank deposit. However, they are covered by SIPC insurance. There are a couple of negatives to consider. This option isn't automatic. You have to have a Schwab account and then purchase units, just like buying a stock or a fund. If you don't have a Schwab account and you like to travel, they offer an excellent feature. When you use an ATM to withdraw cash from your Schwab account, they record the fee charged by the local bank, regardless of which country you're visiting. They add up those fees, and then at the end of the month, they reimburse you the fees for the month. In other words, Schwab pays all ATM fees worldwide. This has saved me hundreds of dollars. I don't have any links for Schwab, just letting you know that the feature saves me money every time I travel. One other thing to know about purchasing SNSXX or any of their other mutual funds, the purchase will show up in your account on the next business day. Same thing when you sell. The cash will be available on the next business day. So it's not quite as liquid as the first two options that I showed you. Researching these options for higher interest was an eye-opener for me. It would be nice if Brokerages sent you an email that says, "We noticed your cash is earning a crappy rate. Here's a much better option," but they really enjoy having free use of your money. If your cash is earning less than 1%, see if your broker offers options in that 4 to 5% range we talked about today. I haven't researched every single broker, so if you've found better deals, then leave a comment below. Before I go, I mostly make videos about stocks and funds paying in the range of about 8 to 12%. And I've made a playlist of my favorites. If you're new to the channel, you'll find some great ideas in that playlist. That wraps it up for this look at higher yields in brokerage accounts. More armchair income coming soon.